What's up, guys? It's X again. All right, I know it's been a while since I've recorded anything for you guys, but here we go. Here we go. I've been quite busy lately, and I'm sure most of you guys know that I've started a mentorship program for those that have asked for it. And if you are interested in it, I'll leave a link in the description. Follow that, and it will lead you straight to my website where you can sign up for that. I've also written a book, and that too is on the website as well. The book breaks down my strategy, right? All right, so the link again is in the description. All right, so without further ado, guys, look, I still get emails from you guys, and I'm sure you by now you know that all of my videos I make, or I record to answer questions that most of you guys actually send me. So to this day I still continue to get emails from you guys. Pardon me, guys. So to this day, I still continue to get emails from you guys. You know, and it's consistent, really. It's consistent. But the question at hand is, how do you find your direction? Right? I've made a video a long time ago speaking on this, but I'm just here to simplify it. It won't be as simple as you might think it is, but I'm here to simplify it. And again, this is something that you're going to have to spend time with in order for you to be able to understand it. Now, once you do understand it, everything is going to fall into place. And really, trust me, and I don't care what it is that you trade. You could trade indicators, crossovers, you could trade RSI, MACD, whatever it is that you trade, provided that you know how to find your direction or your bias, aka your bias rather, provided that you know how to find your direction. It's going to become impossible, not really impossible, but a lot more harder for you to lose trades, essentially, right? Again, you'd have to work on this. It doesn't come easy whatsoever, guys. It is extremely difficult for you to get to grips with what I'm about to show you right now. All right, so let's get into it, guys. Now, I want to say something real quick, right? In respect to price, guys, this again, you have to apply logic in respect to price, right? We all know that this is how price moves. Price moves in a series of higher highs, higher lows, lower lows, and lower highs. So this is a downtrend, so this should be lower lows and lower highs. And in an uptrend, we should be seeing the opposite, which is higher highs and higher lows. Let me make one more, and we've got a higher low, and then finally a higher high. This is truth, guys. It doesn't matter what it is that you're going to be looking at or you're going to be trading. This is how price behaves, right? The pullback sometimes will manifest themselves as sideways movement. It's still a pullback. Don't confuse the two. They're the same thing, essentially, right? I know it may sound like I'm rewriting the book, but that's what it is. A pullback and sideways movement is essentially the same thing, provided that it happens in the scope of what I'm going to show you. But in any case, that's how you should be interpreting price or price action or price structure in the first place, right? All right, so again, this is truth. This is logic that you're going to have to apply. If you know for a fact that this is how price works. This is all that you need to apply to all the time frames that you're going to be analyzing. Not really analyzing. Some you will analyze more than the others, but there's only one that you're going to do most of your analysis on, right? And that one is the one that you're going to be following, essentially. And yeah, that's the one that you're going to be following, right? So remember this, guys. It's logic that price actually behaves in this manner. Remember that. So right now, what you want to do, or before I do that, I need to just point out another thing, right? You need to understand, guys, that price is fractal, right? You need to know that price is fractal, right? The weekly will always have its own price action, the daily will always have its own price action, and all the other time frames will always have their own price action, right? There's a hierarchy between all of these time frames. The 1 minute will respect the 2 minute chart, the 2 minute will respect the 3, and so on and so forth until we get to the monthly. So with that being said, there's only 3 time frames that I concentrate on because I executed the hourly chart, right? That will be the weekly, right? That's my biggest time frame. And then I look at the daily, which is the main time frame that I follow. I follow the daily and I execute at the hourly chart. Do you understand what I'm saying? Now think of it this way. The reason I follow the daily is because it respects the weekly. And the reason I look at the weekly is, again, because the daily respects the weekly. I want to see where the daily could potentially reverse based on the weekly chart. And when I see that, then I know I need to see specific things happen on the daily. Now, all of that I'm not going to be pointing out here in this video. It's a topic for another day. But I want to see certain things happen on the daily, responding to what the weekly is telling me. And then at the execution, I want to see the hourly chart, which is my execution, responding to what the daily is dictating. So hierarchy, guys. The hour will always respect the daily will always respect the weekly, right? And I want to see where each and every one of these I almost said currency pairs, but each and every one of these time frames, I want to see where they will potentially terminate and reverse. That is why you have to look at all three of the time frames. If you're day trading, you also have to look at three. I'm not going to touch on that as well. It's a topic for another day. So I just want to show you how you can actually find your direction. You can easily take what I'm showing you and apply it to any three time frames. If you want to execute at the 5-minute chart, for instance, you can execute at the 5-minute chart and look at, say, the hourly chart, right, as well as the daily as your biggest time frame, right? Treat the daily as I would treat the weekly. So your final time frame would be your daily, and then followed by the hourly, which is the one that you will be following, and then executing at the 5-minute chart. If you want to do that, that's completely up to you. But what I'm showing you can be applied to anything and any time frame, but it has to be 3 time frames, right? And I'll show you why in a minute. Now, with that being said, guys, it now becomes a whole lot more easier for you to understand and know that the weekly or your bigger time frame will move slowly, right? Your bigger time frame will move slowly to all the other time frames, right? And when it moves slowly, it allows you to see and think about what price is about to do or is going to do at that bigger time frame prior to you jumping in. Does that make sense? I hope that actually makes sense, guys. But the whole point of following a bigger time frame is just so that you can better anticipate what price is most likely going to do, aided by all of this, aided by the fact that price prints higher highs and higher lows as it continues down or as it continues higher, right? It's all logic, guys. It's not, there's no magic to this, there's no indicator to this. It's just you have to sit down, look at price structure, and try to interpret it for what it really is. And once you do that, you will find your true direction. And once you get your direction, it's going to be near impossible for you to lose any trades, right? Coupled with your strategy. All right, so with that being said, guys, let me show you how I would actually approach a currency pair, right, or a chart, right? So we are looking at NZD USD right now, right? We're looking at NZD USD. So the first thing that I would normally do is I would take a look at where price is at currently. This is current price, right? So this candle here, this is the weekly chart, by the way. This candle here, that's current price. This is this week's candle, right? Now all you have to do again is look to the left to identify your price structure. Again, logic, lower lows and lower highs, right? You want to identify your lower lows and lower highs, or higher highs and higher lows. And in this case, it's a little bit more easy for us to identify our lower lows and lower highs, right? So we can see that the weekly is extremely bearish, right? We can see that the weekly is extremely bearish right here. So right here, boom, that's a lower high. And then finally, before we get to that, but anyway, yeah, and then finally lower low, right? So what we've identified here is we've identified that, the weekly is printing lower lows and lower highs, right? And relative to current price, which is here, we can clearly see that price is bearish, right? We reasonably expect that. We expect to see price finding a lower low, right? So again, logic, guys, logic. If we know that price prints lower lows and lower highs as it continues down, right? It's not really a crime for us to assume that, right now price is most likely trying to find a new lower low, and therefore we'll see a reversal start to take place, right? We have to assume that. Think about it logically, guys. We have to assume that, all right, so price is down here. Chances are it's most likely looking for a lower low, and from that we will most likely see a reversal to the high side. And again, we're looking at the weekly, so this will translate to weeks on end of an uptrend, right, which will translate to the smaller time frames. But this is what you want to identify, this is what you want to see, right? So again, knowing the fact that when price moves to the downside, it will print, no matter what. This is how price behaves, right? It will print lower lows and lower highs, right? Which it has done right here, right? So from this lower high, actually that's a lower low. From this lower high here, I'll fix that. That's a lower high. So from this lower high here, right? Let me just fix this one here. OCD. Lower low right there, right? So from this lower high, it would have been reasonable for us to actually expect that price is most likely going to come down here and give us a lower low. Think about it, right? Yes, the weekly moves slowly, but yes, this is what we can expect, right? And with us expecting this, we already know that any other time frame that is below the weekly is most likely going to want to do the same thing. It's most likely going to want to show us its intentions of reversing, and that will translate to the weekly, starting a pullback, right? And again, when this happens, we can also reasonably expect that price is going to print a new lower high, right? This is how you find your direction. Now, again, you don't have to do a lot of analysis based on the weekly chart, right? Most of my analysis is done on the daily because that's what I follow, right? But you need to know this because because the weekly will always dictate to the daily where it should terminate and where reversal should always start. Remember that. Now, I'm not going to touch on that. Like I said, it's a topic for another day. But the weekly will always dictate to the daily where it should terminate and where it should reverse. Remember that. Likewise, the daily will always dictate to the hourly chart where it should terminate and where it should reverse, right? Where a move should terminate and where a move should continue or reverse. Think about that. Logic, simple logic. This is how you question the market and you go out your way to find the answers, guys. Most people, oh my goodness, I cannot say how many people, a lot of you guys are under the impression that you cannot discover what the markets are actually doing. So therefore you attribute everything that you learn from other people. Guys, I'm self-taught. Trust me, I'm self-taught. Yes, there's a lot of information on YouTube and all of that and bloody blah fish paste, all of that. You can take all of that and interpret it on your own. But trust me, guys, what someone else teaches you may not ring true with you. It's not until you sit down and you really go through everything that everybody has been telling you when you start to see these things actually happen, right? So again, guys, you can discover how the markets actually work and how they actually move on your own. You don't need anyone else. You don't need me, certainly, because at the end of the day, you're the only one that's going to click buy or sell and not me. You know what I mean? So it's guys, if you really want this, you will sit down and you will put your blood, sweat, and tears into this. Trust me. Once you do, it's going to be extremely hard for you to forget anything that you do. Right? Again, guys, this is just me talking to everybody who just constantly on my back asking me if I learned this from specific people. No, guys, I discovered this. I don't get why people always think that you cannot discover what the markets are doing. Look, guys, every single one of us that are creating YouTube channels, teaching you things, not one of us have the source, guys. Nobody has it. Does that make sense, guys? It's not one of us have the answers to this. You just go in and you discover these things, guys. Trust me, work hard at it, you will discover it. You know what I'm saying? And again, don't short sell yourself, guys. You can discover what's going on in the markets. I'm sorry, I know I'm rambling. This is something that is passionate to me because a lot of you guys are short selling yourself into believing that you cannot discover what the markets are actually doing. And you can. You can. If I can discover it, I'm human after all. I'm no alien, I'm not a boffin. Look, I'm human. You human as well. If I can discover it, you can discover it as well on your own. So stop short selling yourself and double down. If you want this, you will double down. I constantly say this. But anyway, sorry for my ramblings, guys. But anyway, so that's what we look for at the weekly, right? We want to see price structure based on a weekly, and it's just rudimentary kind of simple type of things that you want to look at when you get to the weekly. You want to identify your lower lows and lower highs and higher highs and higher lows, right? Now it gets a little bit more interesting. I'm not going to remove these, right? I'm not going to remove these lines here that I've just marked here, these orange lines, right? Because I want you to identify that this is the weekly price section. Now again, This is all that I look for at the daily, and then I'll go down to my, at the weekly, and then I'll go down to my daily chart. When I get to my daily chart, look at this, an interesting thing shows up. Do you see what I meant by price is actually fractal? Do you see in between this move from this lower high to this lower low? When you look at it from the weekly chart, it just looks like multiple candles to the downside, not a lot of price action here looking at it from the weekly chart. But when you go to the daily chart, then it becomes a little bit more different, because the daily chart has its own price action. Remember that, guys. Remember that, guys. That's why everybody keeps saying, price is actually fractal. It's fractal because each and every one of these time frames have their own price structure. And this is something that you should always keep in the back of your mind, right? It's important that you understand all of this. Now, again, we're at the daily, and you can see that this impulse move to the downside based on the weekly, the orange move here to the downside, this continuation, right, has its own price structure based on the daily chart. This one is a little bit more smoother. In most cases, it won't be that smooth, right? So it will be, sometimes it will be erratic, sometimes it won't. So for instance, you'll get a lot of price sections such as this one here, right? Except for this middle here. But anyway, you'll get a lot of price sections sometimes like this, and sometimes it will be just swift. It will just want to move from one point to the next as quickly as it possibly can, like it attempted to do right here, right? Most of the time that's what it will do, but sometimes you will get that clear price action that will give you opportunities to jump in. Again, when you look at the daily, the same thing applies here. Again, this is only part of my analysis, right? There's a whole lot more things that I look for that should happen in order for me to be able to go, all right, now I'm ready to trade, or now everything has lined up, I should be doing this. I'm just merely showing you how to find your direction, right? So again, this impulse move from the weekly lower high right up here, right, suppose it just reversed to this lower low right down here, we should know that the daily is also going to be bearish, right? The daily, remember, is the one that's going to show us that it's about to reverse, therefore reversing the weekly, and the weekly will then start this impulse move to the downside, or this continuation itself. But the hour, the daily is going to be responsible to showing us the reversal, or showing us showing us the reversal, right, in terms of price structure. So the daily is responsible to showing us the reversal, right? The weekly is responsible to showing us where we can expect that particular reversal to happen based on the daily chart. But again, you wait for a reversal to happen, or you want to see the daily will be the first one to show you that, look, I'm about to reverse to the downside, and therefore starting this move to the downside based on the weekly chart, right? And that's what you wait for. And when it does that, price will start to print its own price structure in accordance to what we saw based on the weekly. You got it right. Based on the weekly. Now let's make this black, right? This here is price structure based on the daily chart, right? So the daily chart, you can clearly see it's also printing lower lows and lower highs. Right there. Lower lows and lower highs. So let me just complete this here real quick. Lower lows and lower highs. Lower lows and lower highs. That was a nice impulsive move there, and we saw this pullback right here, and we saw continuation stop here, and another pullback, and another continuation right here, right? I'm leaving all of this here, so I hope it doesn't confuse you. I'm leaving all of this here so you can see it from my execution time frame, what it actually looks like. So this is just another way of trying to get you guys to kind of identify this, right? But in any case, this impulsive move here in the orange is based on the weekly. That's the bigger picture. And then we've got the daily, right? Right here is the daily's price action in between, right here, in between that impulse move to the downside. And the daily has its own price action, or its own price structure, right? So if you blow it up again, the daily has its own price structure, which you can clearly see right there, following suit to what the weekly is actually doing. Now again, we're gonna go down to my execution time frame. Now once I've identified all of this, again, there's a lot more that goes into this, right? For me to be able to execute at the hourly chart. I'm just showing you how to find your direction. Now you can clearly see that the daily is moving in accordance to the weekly, right? So the weekly suggests that we're supposed to be going down, we're supposed to be bearish, right? And when it does that, or when the daily eventually shows us that it's ready to move in the downside, then we know that we're going to most likely see a move for many weeks. Could be 2 to 3 weeks or 4 weeks, depending on how quick price actually moves, right? So when the daily eventually conforms to the weekly, we know that we're going to see weeks worth of a downtrend, right? Does that make sense? Fantastic. Now again, when I've identified all of this and I've identified the daily starting to move in the direction of what the weekly suggests, then I'd have to go to my hourly chart, right? When I get to my hourly chart, again, see how fractal price is. Every single pullback and continuation that we noted based on the daily chart also has its own price action in between, right? Also has its own price action in between. Now look at this. From up here all the way to here, we've got price action based on the daily. Not the daily, the hourly chart, right? Price action based on the hourly chart. Again, blow it up. And now what we want to see, the same thing again. We want to see lower lows and lower highs print. So price goes down here, comes to rest, pulls back up slightly. Now let's make these, I suppose we can make these green, right? Let's make those green. Let's remove this one. Let's blow it up some more. So right here, so the hourly chart moves down, right? Pulls back here slightly, and then it continues to the downside. All of this is price action, price structure, guys. Remember that. Price structure right here comes up, and it does all of this, starts to move a little sideways here, right? So we want all of them to line up, right? Then it goes all the way up here. And then it starts again a new cycle of lower lows and lower highs, and so on and so on and so forth, right? So it too has its own price action. Now look at the pullback here. It too has its own price action. The same can be said with the daily as well, right? The daily as well having its own price action in the pullbacks. Now here's another continuation that also has its own price action based on your execution time frame. So essentially what you want to do is you want to wait for all the currency, not the currency pairs, you want to wait for all of the time frames that you are monitoring to fall into place or to follow one another, to be in line. Really, you want them to be in line, and once that happens, then you know in which direction you're going to be trading. Now again, guys, when price pulls back, and I know most of you guys are asking this, when price pulls back like it does here, right? This is where your discipline has to come into play. You have to, normally what I would do here is I'd sit out of these, right? And the reason I'd sit out of these is because these are counter trend moves. All of these are counter trend moves, provided that the weekly hasn't reached its target by means of a lower low or higher high or higher low, whatever the case is, provided that it hasn't reached that, right, and started to reverse for whatever reason, or it's just reached another point where it's supposed to be reversing, bloody fish paste, I'll continue to hold on or try to trade the continuation moves. This goes back to what everybody always keeps saying: trade with the trend. This, if it makes you understand this a little bit better, I would say that's it. I would say this is kind of like trading with the trend itself, but you need to apply, or you need to have discipline in knowing that, look, you have to stay out of, the pullbacks themselves as they happen. And I'm not talking about pullbacks that happen at the execution time frame. I'm talking about the pullbacks that happen at the daily chart, right? The daily chart, or your middle time frame, right? The middle time frame for me is the daily chart, which is the one that I follow. So essentially you will be sitting out of the markets for like what, 1-2 days. Look at this one here. When it pulled back here, you would have set out for many days, and this is what's going to test you. Trust me, this is what's going to test you. This is why I say you need to go back and you need to back test this, and you just make sure that you understand everything that I've noted, or what I've shown you here, right? Because it's going to help you immensely moving forward, right? So we're going to leave it here. So let's just let me summarize it one more time again, guys. Again, all you have to do is apply logic, guys. Remember that. All you have to do is apply logic. We know, that bigger time frames always dictate to smaller time frames, right? We know that it's logic. So meaning that if you identify a price structure based on the weekly, I mean, the daily should respect what the weekly is actually dictating, right? Think about it. Let that sink in for a minute. If this doesn't make sense, you've got a long way to go, but think about it. If we identify a structure based on the weekly, the daily should, right? The daily should and always will respect what the weekly is actually dictating, right? Likewise with the daily, if you're going to be executing at the hourly chart, the hourly chart should respect what the dailies actually say. Does that make sense? Great stuff. Now let all of that sink in, right? Couple that with the fact that price likes to print higher highs and higher lows as it continues high or as it continues low. Put that all together and try to visualize it on the chart, or put it down like I have done here, and you'll quite easily and quickly start to see what price is actually telling you. You'll quite easily start to see what price is about to do when it's about to do whatever it is that it wants to do. Does that make sense, guys? This is the crux of how you're going to be successful. Once you understand this, it's going to become extremely simple for you to be a profitable trader. Again, you don't have to look at old lows, old highs, bloody blah, fish paste, all of that to find your direction. Finding your direction is a case of identifying price structure first. Once you identify price structure first, all the other layers to your system will then be piled onto this. Once you have this concept down, it's going to become extremely simple for you to actually trade, right? And a nice part about this is when this is in place and price is following the bias, for lack of a better word, or it's following direction, it doesn't matter whether NFP is going to come out, it doesn't matter what type of news is going to come out, interest rates, all of that, it doesn't matter. Price will always respect the direction that you've identified. Right? So we're going to leave it there, guys. Oh, before I go, guys, remember, when price pulls back, you want to stay out of it, right? Sit back, relax, and wait for price to give you what it wants, or rather give you the signs that you want to see that price is about to continue the trend, or whatever the case is, be it a crossover, be it overbought or oversold based on your RSI, whatever the case is, do it. All right? Wait for that to show you or give you that confirmation, depending on your strategy. My strategy is completely different to most of you guys, but it is supply and demand based. That's all that I'm going to say to you guys. All right, so that's been it. I'll see you in the next recording, and stay safe. I'm out.